Welcome to FinLoop. We need to talk about AI because we're at this really critical moment. It's like we've spent all this time building the engine, and now, finally, we're getting in the car to actually drive it. And for you, as an investor, well, that changes absolutely everything.
So this whole thing, it kind of boils down to one single number, 9.7%. Right now, that's how many businesses in the US are actually using AI. Now, I know that might not sound like a lot, but it's climbing. Every single quarter, it ticks up, and it's pushing us right to the edge of something big.
So what? Why are we even talking about this number? Because, look, we are basically standing on a launch pad. If you look at history, whenever a new world-changing technology hits that 10% adoption mark, it doesn't just, grow steadily. No, it explodes. It goes completely mainstream.
And that's where we are right now. We're talking about AI's critical threshold. We are literally on the brink of that exponential growth phase. And honestly, all the signs are pointing to us crossing that 10% line by the end of this year.
Yeah, and this 10% number, it's not just something we pulled out of thin air. It is the historical tipping point. It's that magic moment when technology goes from being a thing for early adopters to being something everyone uses. So, to really get what's about to happen with AI, we've got to look back at another piece of tech that changed the world.
And there's no better example than the smartphone. You know that old saying, history doesn't repeat, but it often rhymes? Well, the parallels between the smartphone revolution and what's happening with AI, they're impossible to ignore.
Okay, so check this out. What's truly mind-blowing here is the speed. I mean, look at this. It took e-commerce 24 years to get to 10% adoption. Smartphones did it in 5, which felt incredibly fast at the time. But generative AI, it's on pace to get there in just 3 years. That is just unprecedented. And this timeline for the smartphone, it tells the whole story perfectly. For those first 5 years, you see this slow, steady climb up to that magical 10% mark. But then, look what happens after it crosses that line. We call that the inflection point. The curve just goes vertical. In the very next 5 years, it shot up from 10% to 68%, fueled by things like the App Store and cheaper phones, making it accessible to everyone.
And that's the key right there. We believe AI is about to follow that exact same playbook. It's shifting out of what we call phase 1, building all the heavy-duty infrastructure, and right into phase 2, the explosive exponential growth of actual intelligence and applications.
And let's be super clear, don't let the hype fool you. We're still in the very early stages of this whole thing. So the big takeaway for you as an investor is you need to get ready for this pivot. We're moving away from that slow, early build-out phase and into a flat-out explosion in how AI is used and, maybe most importantly, how it's going to make money.
You really have to think about these two phases differently. They require completely different playbooks. So phase 1, where we've been living for the last couple of years, that was all about laying the groundwork. Think data centers, think powerful hardware, think chips, lots and lots of chips. But phase 2, that's about what we build on top of that foundation. It's about the software, the apps, the tools that actually make the money.
Okay, so the big question is, where's the money going to go? To figure that out, we've got to deconstruct the AI market and look at the entire value chain.
The easiest way to think about this is in 3 layers, kind of like a cake. At the very bottom, you've got the enabling layer. This is the foundation, right? The semiconductors, all the physical hardware. Then, in the middle, you have the intelligence layer. This is the brains of the operation, the AI models themselves. And then, sitting right on top, you have the application layer. These are the tools, the software, the stuff you and I will actually use that puts all that power to work. So, in phase 1, the early days, the investment strategy was pretty straightforward. Almost all of the money, all of the attention was focused on that bottom layer, the enabling layer. It was a classic gold rush scenario, and everyone was investing in the companies making the picks and shovels.
But now, as we step into phase 2, this exponential phase, watch closely. You're going to see the value shift and shift dramatically up that stack. The focus isn't just on the foundation anymore, it's moving to the applications. It's moving from the companies that make the chips to the companies that use the chips to solve real-world problems and, make a profit.
Seeing this shift is really the key to the whole thing. It unlocks the new investment playbook. So let's talk about what this actually means for you. How do you position your portfolio for what's coming next? All right, it really comes down to 3 main things you need to be thinking about. First, you've got to rebalance your thinking beyond just the chip companies. They're still important, but they're not the whole story anymore. Second, start giving more weight to that application layer, We're talking about the software companies, the internet companies, the ones who are actually monetizing this stuff. And third, and this is an interesting one, start hunting for the AI laggards. These are solid companies that maybe haven't gone all in on AI yet, but are about to, and could see a huge benefit as this technology becomes universal.
So here's the bottom line, right? The game is changing. It's not enough to just invest in the picks and shovels anymore. The real opportunity is shifting to the people who are actually using those tools to find the gold. The first wave of AI made fortunes for the infrastructure builders. The big multi-trillion-dollar question now is, who's going to build the empires on top of all of it? Subscribe to FinLoop for more short-form insights on finance, investing, and global markets.